everyone. After the budget, I received multiple requests to discuss stocks that can potentially benefit from 2023 budget. So I have identified 6 key themes and stock within each theme that can benefit from the budget. But before we proceed, this video is only for educational purpose and only beneficial for long-term investors. Alright, let's get started. One of the biggest themes from 2023 budget is infrastructure capex of 10 lakh crore, which is 33% more than last year budget. And government is very clear on pushing the growth of infrastructure sector of India. And when infrastructure grows, it ultimately benefits every sector of the economy. However, if you look at specific stock for infra theme, I have 2 stocks in my list. One is from large cap and another is mid cap space. In large cap, it is no brainer. The stock is L&T. I have recently covered L&T in my large cap top stocks for 2023. This infrastructure conglomerate is a leading player in every possible infrastructure activity in India, right from construction, mining, heavy engineering, hydrocarbon, defense, power, and so on. Company has recently declared its Q3 result and its revenues have recorded 17% year-on-year growth and net profits are up 24%. In last 9 months, company has registered 28% year-on-year growth in net profits. And its order inflows have increased by 30% year-on-year. With this, its order book now stood at 3.86 lakh crore rupees, which is more than 2 times its 12 months revenue. Out of this, 74% business comes from India and remaining 26% is from international market. So overall, L&T is very well positioned to capture a large pie from Indian government capex plan and would continue to be a consistent compounder. Currently, it is trading at levels of around 2150 with a PE ratio of 30. My second pick from infra theme is one of my favorite mid-cap stock. It's Polycab. If you have been following my channel, you would know that I am holding this stock in my portfolio and have also recommended it multiple times. Now, Polycab basically has 2 business segments. First is wires and cables and second is FMEG, that is fast moving electrical goods. In wires and cables, company is the biggest player in organized market of India with 22 to 24% market share. And infrastructure setup would continue to need cables and wires. Now its FMEG business is growing at a very fast rate with almost 30% CAGR in last 5 years, where it offers your fans, lights, switches, switch gears and so on. And company has now also entered into solar segment with solar inverter, solar DC cable, solar panels. So future is very bright. Company has recently posted its Q3 result and revenues have jumped 10% year-on-year and profitability is up 45% year-on-year on account of sharp improvement in margins. Currently, Polycab is trading at levels of 3000 rupee at a PE ratio of 38, but still worth adding in systematic manner. Next sector that would benefit from this budget is banking sector. The simple reason is government focus on capex would eventually drive the economic growth and banking sector is the backbone of the economy. And we have already discussed that after a long time, Indian banking sector has a very clean balance sheet with very low NPAs. So high asset quality coupled with high credit growth cycle is going to boost the banking sector of our country. And the fact that today banking sector is looking very attractive in terms of valuation. So I have 5 preferred options in banking sector, 3 in large cap and 2 in mid caps. In large cap, my first pick is ICICI Bank. It has declared its excellent Q3 numbers where its net interest income is up 35% year-on-year and net profits are up 34%. Bank's asset quality has also improved with net NPA falling to 0.55%. So ICICI Bank is looking very strong. Currently, it is trading at levels of around 870 and down around 90 rupees from its peak and available at a P ratio of 19 and PB ratio of 3.33. So worth accumulating. Then second pick is Axis Bank. After a long period of underperformance and NPA issue, Axis Bank has bounced back strongly with consistent rise in net interest income, advances and sharp improvement in asset quality. In latest Q3 result, Axis Bank has posted net profit growth of 62% year-on-year and net NPAs have fallen to levels of 0.47%. Currently, it is trading at again levels of 870 with P ratio of 13 and price to book value of 2.25. So Axis Bank valuation is currently much more attractive than its peer lenders ICICI Bank and SDFC Bank. Bank has already corrected around 100 rupee from its peak and certainly worth accumulating for medium to long term gains. Then my third pick is SDFC Bank. Now this is one bank that has consistently created wealth for its investors in last 20-25 years due to its strong corporate governance structure and top leadership. Although there were some hiccups in the past, but I believe that HDFC Bank would continue to grow and would create wealth for its shareholder. In Q3, HDFC Bank has again posted robust numbers with net interest income growing 24% year on year and net profit jumping 18.5%. And asset quality has been one of the best with net NPA at 0.33%. Currently, HDFC Bank is trading at 1630 with PE ratio of 20.8 and price to book value of 3.65. So again, from valuation perspective, HDFC Bank is looking attractive. Next, I have two mid-cap banks that can potentially grow at much faster rate and eventually become large cap one day. First is IDFC First. We have already discussed it multiple times and also in one of our recent video. After the merger of IDFC with Capital First in December 2018, IDFC First had a very difficult journey due to NPA issues followed with COVID. But under the leadership of Mr. Vaidyanathan, IDFC First Bank kept on building the foundational building block with complete focus on retail banking. As a result, in last 5 quarters, bank has posted stellar profits. In Q3 also, bank's profits have jumped 115% year on year and net NPA has reduced to 1.03%. Currently, IDFC First Bank is trading at Rs 58 with a PE ratio of around 18 and price to book value of 1.76. So from valuation perspective, IDFC First is looking super attractive. I won't be surprised if in the next few quarters, this bank share price crossed 3-digit mark. Then second pick is Federal Bank. Bank has declared its Q3 result and its loan book has grown 19% year on year. Bank's asset quality has consistently improved with net NPA falling to levels of 0.73%. Due to improved asset quality, bank's net profit has grown 54% year on year. Currently, Federal Bank is trading at 133 rupee and PE ratio of around 10 with price to book value of 1.47, which is looking very attractive. Before we proceed further, we have a partner for this video. It's M-Stock from Mirae Asset. So M-Stock has introduced a trading platform where you just need to pay a one-time fee of 999 and you can make unlimited trade without any brokerage. It includes your free intraday trading, free delivery, free F&O trades, basically everything free for just one-time fee of 999. So it is literally disrupting the traditional brokerage sector with its zero brokerage model. And since M-Stock is a part of global Mirae Asset Group, it brings 25 years of legacy and experience of 15 countries. So if you are a trader, then M-Stock can save you a lot of money in brokerage. And even if you are an investor, then you can consider M-Stock as an alternative trading platform to save money on brokerage. By the way, in last 9 months since launch, M-Stock is adding one client every second and has added over 1 lakh clients with over 4 crore trades, with 73% active clients with 100 crores of MTF booked. And now you can also trade using M-Stock e-margin facility that offers one of the lowest interest rates in the range of 7.99 to 9.49%. It has a very user-friendly interface and the platform is built on advanced technology that can process thousands of orders per second and provides you with stable platform and a seamless experience. If you want to explore M-Stock, I have provided the link in the description box. Next important theme for 2023 budget was green energy and sustainability with solar power, lithium-ion battery as well as green hydrogen. So this green energy theme is going to benefit multiple companies in the ecosystem. For example, it will benefit auto companies that are working on electric vehicle segment, and that's where Tata Motor, being a leader with first mover advantage in passenger vehicle EV in India, can outperform. Tata Motor electric vehicle range of vehicles include your Nexon EV, Tigor EV and Express T for fleet buyers, and has also recently launched the sub 10 lakh rupee segment car Tiago EV and has started delivery for this car. If you look at their domestic market sale, it has grown 57% year on year. Company has recently declared its Q3 result and has outperformed the expectation with a profit of 3,043 crore after consistent quarters of loss. Considering it is just the beginning of EV sector in India, Tata Motor has a long way to grow. And the fact that at current price of Rs 440, Tata Motor commands a price to sale of 0.5, which is very low. Just to compare, Maruti Suzuki has a price to sale of 2.4. Then I'm also bullish on Mahindra & Mahindra, which I also discussed on my top stock for 2023. Company latest products are ruling the market, including XUV 700, Thar and new Scorpio. Company's management has also announced the launch of electric SUV XUV 400 by end of March and has already received over 10,000 advance bookings. Currently, Mahindra & Mahindra is trading at levels of 1350 with PE ratio of 20. Another reason why auto stocks can do well in the short term as well as in long term is because of softening of commodity prices that would improve auto company margin. Apart from this, government focus on green energy would also benefit green energy producers. And in this segment, my large cap pick is Tata Power. Again, Tata Power is one of the leading solar rooftop manufacturer and has also planned to set up 1 lakh EV charging station by 2025. So I believe that Tata Power is one of the best positioned company in green energy portfolio. Of late, Tata Power share has not moved a lot, but from valuation perspective, now Tata Power is available at a price of rupees 205 at a PE ratio of 25.7. That looks reasonable. So worth considering in your portfolio. Then I have a small cap company in green energy space. So Finance Minister has mentioned about target to produce 5 million tons of green hydrogen by 2030. Now recently Indian government has announced a green hydrogen mission where it has allocated 19,700 crore. So green hydrogen can be another big area of growth in green energy space, and my preferred pick in this space is MTAR. Now I did a video on MTAR at the time of its IPO in March 21. So MTAR is basically a precision engineering company that provides precision engineering components that are critical in areas like hydrogen fuel cell, nuclear power, space and defense. Some of the top clients of MTAR include ISRO, DRDO, Hindustan Aeronautics, Nuclear Power Corporation of India, and Bloom Energy, which is the world's leading solid oxide fuel cell company with 60% of global market share. In last 5 years, company profits have zoomed at 43% CAGR rate. And considering the fact that it is just the beginning of green hydrogen in India, there is immense growth potential. Currently, MTAR is trading at levels of 1680 at a P ratio of 69 with a market cap of around 5,200 crore. In fact, MTAR is one company that I have recently added in my portfolio. I am soon going to discuss the in-depth business of this company in my next video. Then Indian government is also focused on one sector, which is defense. Defense budget stood at 5.9 lakh crore, which is up 13% year on year. And Indian government is very clear in reducing the export of defense equipment and encourage domestic indigenous companies. So there are again multiple companies that would benefit from focus on defense sector. In large cap, it includes Hindustan Aeronautics and Bharat Electronics Limited. I've already discussed about HAL in detail in past. Then in mid-cap space, Bharat Forge is very well positioned to gain from this trend. Again, I've covered Bharat Forge in detail. And then from small cap, Data Pattern is looking very attractive. Although Data Pattern has recently jumped a lot after its Q3 result where its profit zoomed 272% year on year. But it is still a small cap company with a market cap of 7,200 crore and worth adding in systematic manner. Next theme in 2023 budget was focused on agriculture. And I have two picks in this theme. My top pick that will benefit from agriculture boost is ITC. The most trolled stock of 2021 is now up more than 80% in last 1 year. Again, I covered ITC in 2021 when it was at very low levels and also covered it in my recent video of top large cap stocks for 2023. So ITC is the second largest exporter of agri products with focus on exports and domestic trading of food grains, marine products, processed fruits, coffee and so on, and has built a very efficient supply chain that creates and delivers immense value across the agriculture value chain. Although agri products form a very small chunk of ITC revenue and major business still comes from cigarette, but ITC is increasing its focus on FMCG segment and going to be benefit from this agriculture theme. In fact, it is also going to benefit from next theme, which is tourism. I'll discuss it shortly. The only catch is ITC has jumped a lot in recent past. In fact, after the budget, ITC is already up 10%. Although from valuation perspective, it is still looking decent with a PE ratio of 27. So worth adding in SIP form. And ITC is a great dividend paying company. Then second stock is from small cap space. It's Godrej Agrovet. Godrej Agrovet is a diversified R&D focused agribusiness company and hold leading market position in businesses including your animal feed, crop protection, oil palm, dairy and poultry and processed food. Recently, it has announced plans to invest 250 crores to set up oil processing unit in Telangana. Currently, Godrej Agrovet is trading at rupees 450 at a PE ratio of 24.7. Now, final theme that can see boost from budget 2023 is travel and tourism. Finance Minister has announced identification of 50 destinations to be developed as tourist hub, and it will benefit hotel industry immensely. Although I am very selective on hotel stocks as majority of them are not highly profitable. But one company that can deliver good returns is Indian Hotels, the parent company of Taj Group of Hotels. Although in terms of valuation, it is looking slightly expensive at a PE ratio of 61, but can be considered adding on dips for long-term value creation. So if I conclude, my top picks for budget 2023 include L&T and Polycab from infrastructure theme, ICICI Bank, Axis Bank, SDFC Bank, IDFC First and Federal Bank from banking sector, Tata Motors and Mahindra from EV segment, Tata Power and MTAR from green energy sector, Hindustan Aeronautics, Bharat Electronics and Data Pattern from defense, ITC and Godrej Agrovet and agriculture theme, and finally Indian Hotels from tourism theme. Well, tell me, which is your preferred pick from budget 2023? Again, I would request don't follow these stocks named blindly. Ensure that you have done your research before investing your money. I hope you'll find this analysis useful. I'll see you next video. Till then, take care.
Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.